With a glimpse of hope appearing by the containment of the pandemic that affected the world at large, the Russian-Ukrainian crisis cast its shadows on the globe with its harsh economic effects. Global food supplies have become threatened. Commodity prices are seeing values reminding us of those witnessed 2 decades ago, and the effects are still being revealed. A new world order is in the making, and what some considered as a political strategy, others are considering an existential threat. Wars are being instigated at the behest of solidifying powers, yet the outcomes can lead to uncalculated devastation. The economic well-being of billions is at stake, while their welfare was thought to be the top priority. If only history taught us better. Good evening. You're watching the Business Insider here on Nile TV International, and I'm Ayman Salah. Our weekly program tackles events affecting economies and business, and we aim to bring you the inside story. Welcome back. Let's start with the first news item for this week. Egypt has revised downwards its GDP forecast for the fiscal year 22 to 23, and that is to 5.5%. The draft budget was approved by ministers on Tuesday, with the forecast revised downwards from the previous 5.7% previously announced before the Ukraine conflict shook global commodity markets and affected state finances. Prime Minister Mustafa Madbouli had directed the Finance Ministry to restructure the fiscal year budget 2022-2023 to reassess priorities with a combination of austerity and increased social spending to help support the populations most affected. Austerity measures will be considered due to the billions of Egyptian pounds in extra costs due to rising commodity prices. The government expects to spend an additional 15 billion Egyptian pounds this fiscal year due to heightened wheat prices, while oil prices are now in the triple figures, far above the $65 a barrel assumed in the state budget. The second news item for this week is that the Finance Ministry plans to sell $500 million in Japanese yen denominated samurai bonds in Japan on Thursday, according to Mohammed Higazi, the head of the ministry's debt unit. According to the statements made to Enterprise on Tuesday, the issuance will be in the Japanese yen, but the transfer currency can be in the yen or in the US dollar. This comes a few months after meetings between officials to take the issuance to market in Japan as part of Egypt's debt diversification strategy. The government had been mulling selling Japanese yen-denominated bonds back in 2019, as well as RMB-denominated panda bonds, but the Minister of Finance said in late 2020 that the planned sales were being delayed until at least fiscal year 21-22 because of complications caused by the pandemic. Marketing foreign bonds in Asian markets is a different ballgame since it requires new ratings assessments by Asian agencies. We'll be back. Welcome back to the Business Insider. Tonight I'm joined by Mr. Ahmed Khattab, the economic analyst. A pleasure having you on the show here tonight.
My pleasure.
And we're going to be discussing the latest interest rate developments starting from the West and coming to the Arab world and Egypt, as well as the latest decisions taken by the Central Bank of Egypt by raising the interest rate by 100 basis points, as well as a correction in the exchange rate here in Egypt. Let's watch this report and then start our discussion.
The Federal Reserve increased interest rates last week by 25 basis points, impacting the cost of funds for individuals, banks and businesses. The hike in interest rates resets monetary policy from the historically low interest rates introduced to fight economic contraction from the pandemic. Markets have been widely anticipating the American move, largely driven by a spike in inflation nearing the 8% mark, which is the biggest year-on-year leap since 1982. Under normal circumstances, a rate hike to cool inflation is seen as a usual policy action. However, the war in Ukraine has complicated the decision, as wide-ranging sanctions imposed on Russia have disrupted trade flows, resulting in a surge in input costs, ultimately undermining the post-COVID economic recovery in economies around the world. An interest rate hike impacts the costs of funds of both banks and borrowers, translating into higher financing costs at all levels. Individuals and corporates who have fixed rate loans will stand to benefit if their rates are locked for the entire term of the loan. Those who have loans with flexible rates will see an immediate jump in their interest costs. In Egypt, the central bank decided to raise interest rates by 1% across the board, increasing the deposit rate to 9.25% and the lending rate at 10.25%. Alongside the interest rate hike, currency prices have witnessed a rise, with the CBE stressing on the importance of exchange rate flexibility to act as a shock absorber to preserve the country's competitiveness. Analysts see the decision as necessary to reboot the economy, boost the foreign exchange reserves, and facilitate negotiations with international financial institutions. Moreover, it is viewed as helping to safeguard the narrowing foreign exchange reserve buffer amid renewed capital outflows as a result of tightening global funding conditions and higher food and energy import bills triggered by the Russia-Ukraine war. The pound lost 16% of its value against the US dollar on Monday, following a rise in the inflation and capital flight from bond markets. The fall is seen as unnecessary to readjust the pound's value to attract foreign investment at a time when they were leaving the market. The rate hike on Monday has turned the nation's real interest rate positive and attractive for depositors and investors. Analysts see the devaluation and interest rate hike as catalysts that will work in favor of the country becoming an investment destination once more, with a reduced risk of further devaluations and even the possibility of some appreciation in the coming months. Remittances of Egyptians abroad, which is an important source of hard currency for the country, is also expected to get a big boost, especially after having increased by 73% in the period of 2015 to 2021, with an unprecedented $31.5 billion in 2021 alone.
Welcome back to the Business Insider. Once again, a pleasure to welcome Mr. Ahmed Khattab, economic analyst. Thank you for being with us here on the show tonight. We're talking about interest rates, and let's start with the effect of raising the interest rates in the US on world economies.
First of all, let me send a very positive message to the world. Once the war stopped, we will go back to the normal life again. But during the crisis, our pandemic, during the war between Russia and Ukraine, President of USA Biden and the financial institution in USA take the decision of raising the interest rate. Why all the government on the world, especially in USA, it's a big economy in the world and representative majority of investment all over the world go to the decision of raising the interest rate. The main reason for the raising of interest rate is high inflation percentage happened in America during the last crisis between Russia and Ukraine, and also as accumulated reason of the COVID-19. USA takes the decision to raise the interest in order to make reduction of the inflation rate, because still The inflation rate, 8%, is very high related to the American citizen, especially the high cost of energy also will affecting the oil industry in America, and the high price of liquid gas make more pressure to the industrial sector also. So all the World Bank and all the American bank were was also the government in USA take the decision of raising the interest rate in order to lead to reduce the percentage of inflation. I hope we will reach during the 2 or 3 months settlement in the Ukrainian and Russian crisis, and this will lead to more stability in the economy.
How did the rise of the interest rates in the US affect world economies?
Rise of interest rate in America affect all the international economy, especially the US dollars will be the key currency for all the world till nowadays, and also the euro. But the increase of the interest rate will lead the American citizen to make a saving of liquid cash. So make a saving and reduce the pressure in buying the goods and services will lead to reduction of the percentage of inflation. And all the government and all the banking institution and all over the world will take this decision, like Egypt, for example, and all the Arab countries also. But I think America, as a key country in the world, takes this decision in order to encourage all the American citizens to make saving and make a less pressure in buying of the commodity like cars, especially commodity, not strategic commodity, like for example, traveling.
Decrease consumer spending.
Yes, decrease consumer spending, especially in the luxury foods and the luxury life, like traveling, like services we can postpone until the economy will be more stable. So I think all this decision also were reflected to the Europe and were reflected to the Arab country and were reflected also to the Egypt, because Egypt.
Let's take Europe.
Yes.
And then follow from that.
Yeah, Europe, key country in Europe like Germany and like France also will take a similar situation in rising interest rates.
Britain raised their interest rates.
Britain and Germany will take this decision also. International Monetary Fund, all the World Bank, all institutions will send a clear message to all financial sector in different countries to take this decision until the war will stop. All of us expecting the war will stop during at least 3 months or 6 months.
So now basically raising interest rates in the US and in Europe is due to the inflationary pressures that are being imposed on the developed economies, such as in the US and Europe. And if we take it from there, this definitely affects the Arab world as well. And we've seen reactions from different financial institutions, different governments in the Arab world. If you will highlight the major effects on the Arab world, what would it be?
The higher effect in the Arab world will also lead a lot of Arab countries to make increase of interest rate in order to reduce consumption and in order to also more to try to reduce the percentage also of inflation. But if we have a positive vision related to Arab countries like Saudi Arabia, like United Arab Emirates, like Qatar, for example, like Egypt, especially the country have liquid gas and oil, we are in a very good situation. Why? Because we have a surplus related to the increase in the price of liquid gas and oil. Egypt, for example, as a strategic country, especially in the field of liquid gas and as a hub for liquid gas will have some benefits of the increase in the price. So increase in the price will lead to reduce the percentage of inflation.
We'll get to Egypt in a moment.
Yes.
If I concentrate on the Arab world for a while, now you have rising inflationary effects, you have a high cost of petroleum.
Yes.
You have the price of the barrel of oil is at very high levels currently, and forecast still some are worried that maybe it will rise again due to the developments taking place. Some would say no, it's going to settle down because of the lowered consumption or expectations of lower consumptions and so on and so forth. But some analysts would say that the Arab world will follow suit in raising interest rates in the coming stage, because some did not.
The majority of the Arab countries will take the same situation like America and like the key countries like Europe also in raising interest rate in order to reduce the pressure on consumption. And this is at least for the 6 or 9 coming months, or until the end of 2022, in order to protect the economy of every country. But some Arab country will have some gain, especially working in the field of liquid gas and oil and mining also. And Africa, for example, will have some gain. Why? Because the price of gold increased. A lot of African city working in mining, so it will be at value. Also, the field of agriculture is very important today. Why? Because the pressure in the very in the strategic commodity is very essential to all the country to save. So the country working in the field of agriculture, for example, will have more gain from this war. Why? All of us as Arab country or in Egypt care of to provide and support the Arab citizen by food and have at least 3 to 6 months as a reserve, especially strategic product or strategic commodity. So Egypt as a part of the world participated by from 100 to 150 billion US dollar as export or import or as investment with the foreign or with the international market. So this huge number of investments were reflected to the Egyptian economy, especially the price of dollar increased in last 7 days against the Egyptian pound, and central bank in Egypt, Mr. Ahmed, tried to control this price and try to make us.
It's not a matter of controlling price, because you can't control the price of the currency because you floated it. Now, yes. As he said, it was a correction. If we go to the effect on Egypt, definitely one of the major decisions that were taken, which was taken on Monday, was to correct or to reach a correction in the price of the dollar or currencies here in Egypt, as well as raising interest rates by 100 basis yes. points. How would this fall in line with trying to contain the current situation? Or better yet, let's discuss the current situation. How would you analyze the current situation?
Till today, the current situation in Egypt is stable, 100%. So we face some challenge related to the increase in the price of some commodity or some services provided to the Egyptian citizens. But at the same time, the minister and the head of the cabinet, Dr. Mustafa Bouli, working together with the central bank governor and the finance minister to support the Egyptian citizens by starting from 1st of April, increase insurance for retirement person by 13%, and also increase the salary of the employee by 13%, and increase the interest rate to 18% for bonds and for savers. And this will, in first day after the central bank sent this instruction to the governmental bank. 51 billion Egyptian pound will enter into the banking sector.
No,
and
it's not 51. 51 was yesterday. Today it's 103 billion.
Yeah,
Egyptian
this
pounds
is yesterday.
in savings certificates.
Yeah, saving certificates. Yeah, so it will.
That's the 18% that were offered, that were presented by the two major national banks.
Yes, two major national, and this is reflects a very good situation in Egypt, and the interest rate will serve more than 30 million Egyptian citizens make a saving in the governmental bank, and this is a huge number also in Egypt. And represent 30% of the Egyptian citizens have a bonus from this central bank decision. If we also go to the social solidarity minister,
but here, when you talk about the raising interest rates, it's two-pronged. One is for the those who want to save, yet it also affects investments, because high interest rates affects the capabilities or the attraction for investors, for manufacturers, for producers. It makes them fall back from taking bank loans, for example, to increase production, to increase the manufacturing capacity. How is this helping the investment sector?
The investing sector have a lot of advantage from the central bank, like the price of US dollar for import of raw material included in the industrial field will be imported at rate of 16 Egyptian pound for equal to $1, and this is the fixed rate.
That's for basic commodities.
Yeah, for basic commodity and some industrial commodities also. A lot of advantage will provided related to tax sector, especially to the industrial sector and the agricultural sector, and the government will make exemption for 3 years at least.
Property tax.
Yeah, property tax, and all the industry sector working in Egypt, especially in the field of petrochemical industry, gain more than profitability related to the increase in the international price of this commodity. For example, the price of liquid gas increase. Some industry, like also the price of steel increase. So I think if we import some material by very high cost, also reflected to the selling price, because the increase in selling price will cover this shortage in the difference related to the increase of basic raw material included in the industrial field. But this is a world increase, and this increase in the price of raw material coming from abroad, the Egyptian government make a lot of correction action in order to reduce this price. But it's international increase, not
it's an imported inflation.
Yes, this is imported inflation from abroad, not from Egypt. But Egypt as a stable country, and Egypt after economic reform, we take in 2016, we have a reserve from US dollars currency and the euro, and we have a reserve in gold also, and we have a reserve in foods for at least six coming months. So we are very stable. If we make comparison between Egypt and a lot of Arab or Europe country, Egypt in a very good situation. The International Monetary Fund, like Fitch, like Standard & Poor, like World Bank, sent a positive report about Egypt be positive and still be positive for a long time. And Egypt will lead the Middle East in the growing rate in the coming 10 years. And Egypt, till today, Egypt economy and the banking sector stable 100%.
What are the signals that you deduce from the decision taken on Monday? The signals that are issued to the international investor, to the banking, and to the international finance
all international
organizations.
all international institutions and all the international organizations send a positive report about the governmental correction decision take last 2 years.
By the central bank's decision, not the government's.
Central bank decision. And all this decision reflected 100% positively to the international economy and reflected to the international and multinational company work in Egypt. All multinational work in Egypt still have a surplus in raw material for 3 months at least.
Why? Is this because with the correction that has taken place in the currency exchange, this means that you lower the risk of devaluation? Is this why it sends a positive signal?
Yes. And at the same time, we still have a surplus in US dollars in central bank. We have a reserve in dollars in all the government and the private banking sector. And Egypt, as a part of the international market, will matching with the international monetary policy. All the international institutions take in last week especially. If we make some analysis to the export and import, a lot of decision related to some strategic commodity saved for in Egypt for at least 3 to 6 months, and so we till today we are stable 100%, and we still have a good reserve from all commodity and from medicines, from liquid gas, from oil, from petroleum sector. Also, the very good relation between President Sisi and the Arab leaders, like Saudi Arabian leaders and United Arab Emirates. We have secured 100% from all oil we need or energy sector. Added to this, we have a surplus in the liquid gas, and we still we have make export of liquid gas by the very high price, and this is also will reflect positive to the Egyptian economy. We have a lot of mega project still under construction, like infrastructure in related infrastructure in Egypt upgraded, new Alamein city take process and launching, new capital administration city, all operation go according to time calendar. So all mega project in Egypt is still working 100%, and we are stable. And I'm here to send a positive message to all Egyptian citizens. Please don't worry about the future. We have a good reserve from the currency. We have a good reserve from all strategic commodities, especially we will starting from 1st of April in the holy months of Ramadan. And all the minister will save all the strategic commodity in the mega malls and all market by a price. All Egyptian citizens can buy all they need.
When the cabinet met to discuss the proposed budget for fiscal year 2022-2023, one of the instructions that was given by the Prime Minister to the Minister of Finance was to reassess priorities.
Yeah. Reassess priorities. Why reassess priorities? All the world today working in order to make a save of strategic product all citizens need, even in America, even in Egypt, even in Arab country. Besides this, we take the decision of investment in mega project, investment in electricity field, investment in the new recovery of liquid gas and oil, reinvestment in the sector of petrochemical, investment in the sector of agriculture, banking sector, working together with the businessman and supporting a lot of loans to the businessman, especially working in the field of the tourism. And all hotels and all the city like Sharm el-Sheikh, like Luxor, have a lot of support from the government, especially the number of visitors related to the crisis will reduce, especially from Russia, and we depend mainly from tourists from Russia and Ukraine, for example. So the government will make compensation and pumping more dollars and more Egyptian pound to all investors as a loan by a very good
But
facilities.
Here, when I was asking about reassess priorities, the instructions, there were a number of guidelines. One was austerity measures will be considered. Two is spending on social spending, increased social spending, to help support the populations most affected. So this means that there will be a concentration on those in need. Social spending will be high priority on the list in the coming stage. Would you think that the strategy will also rely on localizing industries in order to reduce the level of commodity imports?
Yeah, social, yes. If the increase in the price of dollar against the Egyptian pound will lead the consumer to buy the local commodity, and they will encourage the industry to sell first to the local market, and if we have a surplus, we make export of all product to the international market. And this is also one challenge faces us in Egypt. So once we have a floating of the Egyptian pound, so the positive way of this floating, we have a commodity made in Egypt by a very cheap price, and all the Egyptian citizens can buy it. This is one of the advantages of this decision.
One of the numbers that attracted my attention was the level that the remittances of Egyptians abroad reached.
Yeah.
And that is 31.5 billion US dollars in 2021 alone. We never reached that number before.
Yeah, number before around 12 million US dollars.
Why is it reaching such levels?
This is reflected the very confidence from the Egyptian citizens living abroad in the Egyptian economy. And this is reflected the very strong instruction taken by the governor of the central bank, Mr. Tariq Ahmed, and also the governmental banking and the banking sector. And this is reflected the very high profitability of all this money transferred to Egypt.
So it's more lucrative for them to send their money and invest them here rather than put them in banks outside.
Banking abroad. And this is reflected the very good position of the Egyptian economy also. And all the Egyptian citizens living abroad found a lot of chance in making investment in Egypt, especially in the field of real estate, for example, especially in New Alamein capital city and new administration capital city and the New Alamein city. And a lot of industries launched in the last 2 years, depending on this transferred amount of US dollars or currency.
And now with the interest rates that are being offered with very competitive rates, this is also another attraction. Mr. Ahmed Khattab, economic analyst, thank you very much for joining us on the show tonight. Pleasure having you. Thank you for joining us. See you same time again next week. I'm Ahmed Salah. Good night.